Good to have you join us this morning. I'm Lee Ji-yoon in Seoul. Coming up on today's edition of Business Daily. Korea's economy rebounded a bit in the first quarter of this year, but experts worry that it's not enough to secure solid momentum for recovery. New opportunities for Korea to export its nuclear technology with smaller and safer reactors as it eyes markets in the Middle East. We find out more in just a bit. Consumers in Korea are feeling slightly more optimistic about the economy, according to this month's index gauging their sentiment. The Bank of Korea says the composite consumer sentiment index went up 3 points from last month, reaching 104, indicating there are improvements in consumers' buying potential. A figure over 100 means people are more optimistic than pessimistic. The central bank says the government's policies to revive the economy and recovery of the housing and stock markets have contributed to the improved outlook this month. The sum of asset-backed securities issued in the first quarter rose by 41% year-on-year. That's an increase of $3.1 billion to $10.6 billion, according to Korea's Financial Supervisory Service. This comes as the state-run Korea Housing Financial Corporation nearly tripled its mortgage-backed securities in the first quarter on year, issuing the largest amount among other companies during that period. The corporation has seen rising demand of fixed-rate mortgage loans and amid falling government bond yields since the latter half of last year. A significant jump in air traffic in Korea on the back of a longer than usual Lunar New Year holiday in February. The Ministry of Land, Infrastructure and Transport said it recorded more than 161,000 movements in the first 3 months of the year, or a daily average of nearly 1,800 aircrafts. Both international and domestic flights recorded an 11% rise. The airport to see the biggest traffic gain was Jeju International Airport, which experienced a 20% rise year-on-year on the back of a surge in tourist numbers. Korea, the world's fifth largest nuclear power generator, is also looking to emerge as a force in exporting peaceful nuclear technology. And a recent Korea-U.S. civilian atomic energy pact is raising anticipation that the pact will help upgrade Korea's nuclear export course. Our Eunice Kim explains.
It's a clause in the civilian nuclear pact that would streamline the way Korea exports nuclear technology. While the current 42-year-old agreement requires Seoul to get Washington's approval on any and all trade that happens using U.S. origin spent fuel or parts, under the new deal, Korea would need just one overarching go-ahead if the importing third-party nation is signed on to a mutual nuclear agreement.
The process for exports has been simplified, thus eliminating the uncertainty and minimizing delays that have been present in nuclear reactor construction.
Meanwhile, apart from this breakthrough, Korea has been making inroads in exporting its nuclear know-how by way of homegrown technology. Its latest victory was clinched in Saudi Arabia last month, with Riyadh promising to explore the purchase of 2 Korea-built reactors currently under development. It's called SMART, or a System Integrated Modular Advanced Reactor. Consolidating the main components all in one container, this small-scale power station with a capacity of about 1/10 of a full-scale reactor is deemed to be a more economical and safe choice. At the relatively low cost of $890 million, it can be built in about 3 years, and a lack of pipes means zero chance of pipe accidents.
We believe we'll be building hundreds of these smart reactors. It's a product that's valuable on both the economic and global scales.
Seoul is looking forward to sharing its technology with the power-hungry world, starting with the Middle East that could benefit from several small-scale reactors in a landscape where cities stretch far apart from each other. Eunice Kim, Business Daily.
Now, latest numbers show that the Korean economy rebounded slightly in the first quarter of this year, but it might be too early to pop the champagne just yet, as sluggish exports might make for a difficult road ahead. Our Shin Se-min on the story for us this morning.
The Korean economy grew 0.8% in the first 3 months of this year. That's a pickup from a 0.3% gain in the fourth quarter of 2014, but still firmly in the below 1% range for the fourth straight quarter. The Bank of Korea said Thursday a recovery in the housing market led the overall growth.
The Q1 GDP bump is attributed to a 7.5% increase in construction investments, driven by residential housing projects, as well as improved domestic spending.
What's worrisome, experts say, is the figure on the exporting front, the country's traditional growth engine that showed no improvement.
The weaker Japanese yen and China's decreasing dependence on Korean products are denting Korea's outbound shipments. So it's important to breathe new life into consumer sentiment to prop up growth.
From a year earlier, Korea expanded 2.4%, marking the slowest pace of growth since the first quarter of 2013. The central bank said that the subtle first quarter rebound is a sign that the economy is on a recovery path, heading towards its estimate of 2.7% in the first half of the year. But analysts say that it's still too early to be relieved, as the pace of growth is just a step up from stagnation. Shin Se-min, Business Daily.
So is Korea stuck in the path of low economic growth? Despite the small rebound, the fact is that the Korean economy has been expanding under 1% mark for 4 consecutive quarters. With exports and household consumption still not picking up, this is raising concerns that the economy might be stuck in low growth. To tell us more about this, we're now joined by Professor Song Soo-young of Jung-ang University. Good morning, Professor.
My pleasure to be with you here.
All right, so the Korean economy in the first quarter picked up slightly after taking a nosedive in the previous quarter last year. Well, but it just doesn't seem like there's enough to be overly optimistic about as of now.
However, I think it's not that disappointing, because the annual growth rate would be higher than 3%, because the quarter growth rate is just 0.8%. So it's not that disappointing.
All right. Well, then what factors do you think are behind this prolonged low growth?
Yeah, in the global aspect, we can say that secular stagnation is still prevalent. However, even though the United States have shown some relatively very good performance in the economic growth rate, however, as we look around, and the European countries and Japan still has their growth rate is lower than us. So to that regard, we think that what is important right now is what path would be the optimal way for the Korean government to choose. It depends upon which policy would be adopted in the future.
Okay. Well, on a positive note, we did see growth in construction investment, which jumped 7.5% quarter on quarter, thanks to an increase in residential building projects, and also investment in research and development as well. But then we're still thinking it's not enough. It wasn't enough to give the economy the boost that it needed. Where can we see some major improvements here?
Yeah. That is mainly because of the lower population growth rate. That plays a very major role to decrease the potential growth rate. However, just a declining interest rate would not be enough to boost the economy, to recover the consumption and some positive influence on some real economy. To that regard, we need not only a little bit declining interest rate, but also we need fiscal policy to provide some kind of the demand power, purchasing power to the population and to the economy.
Okay, well, you mentioned briefly about the key interest rate. The Bank of Korea lowered the key interest rate 3 times last year and this year together alone to a record low of 1.75%. And they're saying that Bank of Korea might lower it again. I mean, what do you see down the line here?
Yeah, just simply the lowering interest rate alone does not help much to the economy recovery, because the increased liquidity would be provided some liquidity to the financial market, and so there would be, I'm concerned about some bubble would take place.
Shifting our gears a bit, the Bank of Korea lowered this year's growth forecast to 3.1% this month compared to the Finance Ministry's forecast of 3.8%. Is there any possibility of further adjustments down the line?
Maybe possible, but however, at least as I told you earlier, that what I most worried about is just a bubble take place in the financial market. That is very concerned. So to that regard, we need some other kind of policy that promotes some consumption in the real economy. So that is, I think, is fiscal policy.
Okay, so the need of fiscal policy.
Yeah.
All right. Well, the country's real gross domestic income, on the other hand, recorded highest growth in more than 5 years. What does that mean?
Would you say again?
The gross domestic income recorded highest growth in more than 5 years. What can we make out of this?
Domestic income, I'm not sure whether the domestic income has shown the highest on the 5 years.
But it did go on the positive side.
Yeah, at least it's positive. So because
Yes.
of some expansionary monetary base, and so at least they provided some liquidity to the economy. That is good news. But however, it only affects the financial market and some kind of residential and construction market. So what is important, what we need right now is spread out those positive effects on the whole economy. That is very important.
All right. Thank you so much for coming in today, Professor.
Yeah, my pleasure. Yeah.
All right, that wraps up today's broadcast of Business Daily. Hope we were able to walk you through the week with up-to-date business news coming out of Korea. We'll be back on Monday at the same time, same place. Thanks for watching, and bye-bye.